Good afternoon. You're watching Your Stocks here on CNBC-TV18. I'm Hormuz Patakia in the Mumbai studios. Joining us today are Astha, Jain of HEM Securities and Ashish Kyal of VST Strategy Advisors. There's been a slight bit of cooling off that we have seen in the markets from the highs of the day. Now, 24,171 is where the Nifty is. There's almost a 200-point drop from the highs of the day. The Nifty Bank too is seeing some bit of correction from the highs of the day. I can't call it a correction, but some bit of profit booking coming in at higher levels. Remember, at the highest point of the day, the Nifty was up well over 1,000 points from Thursday's low, which was 23,268. The Nifty Bank now fighting to hold on to that mark of 52,000, but it is the PSU Bank Index that is continuing to hold on to its gains. 4% higher is the PSU Bank Index. The Realty Index too continuing to grow from strength to strength. The broader markets are holding on to their respective gains, both the mid-cap and the small-cap indices trading with gains of close to 2%. Let's welcome in both Astha and Ashish for joining in. Thank you so much for sparing time, lady and gentlemen, for joining in. Let's first get to our first query this afternoon. Rohit is writing to us from Mumbai, and he has 100 shares of Spandana Spurti, and he bought those at an average price of 656 rupees a share. Now he wants to know whether he should hold on or he should book his losses and move on. Ashish, what are the charts indicating? Is a significant drop from the levels that which Rohit has purchased his shares. What are the charts suggesting here?
Hi, afternoon to you and all the viewers. If you look at Spandana Furti, we can clearly see there is absolutely no bounce back in the stock. It started falling from 1150 levels in Jan 24 and now trading at 369. The cost price is also way above, I think nearly 100% up from here. So it's best to be out from an underperforming stock like this one, where we can see that Nifty has touched lifetime high during this period and could also overall, the trend remains bearish. Any pullback that he can get towards the level of around 440, use that to book out of the stock. And it's better to be invested into the large cap names, something like an SBI or something like a Tata Motors. At this level, looks to be very promising rather than staying in Spandana Furti.
You know, Astha, the second quarter results for Spandana Spurti were disappointing, right? There is a net loss during this quarter. Provisions went up sharply, and it's the trend seen across these MFI-related stocks, right? What do you foresee for Spandana Spurti going ahead, and what should Rohit do with his investment?
Yes, hi, good afternoon to all of you. I think there might be one also point in this whole case is that the implementation of, MFI and guardrails. So that has also impacted the asset quality. And here in the case of Spandana Spurti, the whole matters revolves around the deterioration in the asset quality, which we have seen. And that was the major reason that the stock is continuously showing a downfall. In fact, even after, I think 1 or 2 quarters also, we are not very much sure that whether they will be able to show some improvement in the asset quality, because there were several reasons behind the deterioration. First of all, implementation of MFI and guardrails, which I have already told you. Secondly, there were the rainfall and flood, etc. situation. So that was also one of the reasons. And MFI segment was majorly impacted. So I think here now, if I ask the investor to book out, losses, then it will be the huge losses because the cost price is really high. So my idea here is book partial losses, remain invested in the partial quantity, but remember one thing: it will take at least 1 or 2 quarters more to show the strong, improvement in the asset quality. So be patient enough to hold it at least for 6 months to 1 year time horizon. Don't book the loss in whole of the quantity. So my idea here is partially exit from this counter, but partially remain invested and keep the time horizon of more than 6 months.
The two key takeaways: be patient, but at least book partial losses, if not more. Moving on, then Rakesh is writing to us from Telangana, and he's holding 20 shares of Adani Ports, which he had bought at 1,360 rupees. Now he wants to know whether he should continue to hold on to those investments or he should book out. You know, Ashish, the stock is down almost 30% from its peak, right? Almost 1620 was the high. It's currently around 1170 as we speak. Is Adani Ports. Is there a chance on the charts that there is signs of a buyback or of a bounce back that could take the stock back to the buying price?
First of all, just as a disclaimer, we do hold Adani Ports in our portfolio. And if you look at the stock, it made a low at around 1,000 rupees on the event or the news that came out in a knee-jerk reaction, showed a sharp bounce back from there. And I think it's already up by more than 10-12% from those levels. So my take is that there will be an attempt to fill the gap on the upside. The stock can move on to the levels of 1258. And it has also found the support near the low, which was made on in June, 4th of June during the election outcome. So the overall trend is possibly consolidation. We can expect post some months of consolidation, the stock should resume the upward journey. That's the take. And one has to be patient enough, hold the stock for at least a year and a half time horizon or maybe two. And we can expect the stock reach towards the level of 1550 also on the upside.
1550 on the upside is what Ashish is indicating. But Astha, the second quarter results were fairly okay, right? A 40% jump in its net profit. The guidance too, the company managed to maintain it that they will achieve what they have guided for the full year. But considering the recent developments that have surrounded the group, do you see that just as a passing headwind and the focus will remain on fundamentals, or do you think that this should be used as an opportunity to exit?
So I think I will go with the case B, that it should be viewed as an opportunity to exit, but don't exit at present point of time, because here again the cost price is higher. So exit at the higher level, because now today we have seen the recovery. So my idea here is exit from the stock, but not at this level. Let the stock rise more, maybe till the level of 1300 also. And this is the answer to particular the query of this investor, where the cost price is more than 1300. Now talking about fundamentals, fundamentals are absolutely fine. Performance was in line, and now this company is expected to grow, or to show the growth of 1.5 to 2x of the total India's cargo volume growth. So I think that kind of business this company is having. They have shown the increase in the market share also, but the problem here is with the kind of sentiment and the news flow which we are seeing, that is not letting the stock to move towards northward. So my idea here is, if you are a risk averse, then stay away from this counter, at least for the time being. But those who have already invested in this counter, they try to exit at the higher levels. So idea here is to exit, but at the higher level when we see such sort of bounce back till the level of 1280 to 1300.
Exit at higher levels is Astha's recommendation as well for Adani Ports, 3.5% higher currently. Moving on, then Harsh is writing to us from New Delhi, and he's having 500 shares of VST Industries at 386 rupees. Now he wants to know the long-term prospects of the stock. Ashish, the stock has not done much this year. It's been in this consolidation mode on a year-to-date basis too. The stock is down around, or is up around 4% if I'm not wrong. Yes, it's up around 4.5%. What are the charts, the longer term charts indicating for the stock? Is there a prospect that the stock might move to levels of 400, which is around about the cost price of the gentleman writing to us?
See, if you look at VST Industries, the stock usually moves in the form of very sharp uptick and then reverses back sharply on the downside. So the volatility is very heavy in the stock. But having said that, I think the levels at which it is currently trading around 320 is a very important price action support area, from where the stock has bounced back even in the month of Feb 2024 multiple times. So I would rather hold on to the stock over here and possibly look forward to exit around the levels of 360 or 365 on the upside, and on the downside maintain a stop loss for the stock at around 305 levels.
Astha, the cigarettes business itself has been so much talked about, right? The only company that first comes to mind is ITC. Now, this gentleman is holding shares of VST Industries. Now, over ITC, do you prefer VST Industries as a better investment? And since his buying price is now still higher than the cost price, do you think that once it goes back to cost price, he should exit and use his investments in ITC for a much diversified play compared to just cigarettes?
So here are two cases. First of all, the results were case number A. The results was not in line with the expectation. I think the company has posted, degrowth of around 15% in the bottom line. And when the company is posting the degrowth in the bottom line and trading at a P multiple of more than 2021 as of now, I think markets will not ready to pay such a huge valuation to this counter, because the growth is not there. So that is case A. Now the case B here is that I think Today only the news came that they have a sell one land of around 2.7 acres at around 100 and 101 crore. So now if I mix these two cases together, I think now the stock can show further upside from here, but that can be seen as an opportunity to exit, because until unless you don't post any sort of growth in the bottom line, then definitely the higher P multiples of more than 20 nowadays will not be accepted by the markets. So my case here is exit from this counter, but not at these levels, because some news flow is there. So definitely this counter may try to move higher. So 350 at 340, 350 levels are good levels to exit from this counter.
Right, Ashish, Astha, stay on. We'll ask you more queries. It's time for a short break here on Your Stocks. Astha and Ashish will answer your queries on the other side. Stay tuned. Welcome back to Your Stocks. Ashish and Astha are still with us to answer your queries, and Sailesh Singh is now writing to us from Ahmedabad. He's holding 200 shares of Tata Motors at an average price of 455 rupees a share, very much in the money right now, and he's a mid to long term investor, and he wants to know whether he should book profits and exit or continue to hold on. Now, Astha, the stock has corrected almost 30-35% from its peak. There is a potential demerger that is lined up. They've managed to hold on to their guidance for JLR. There are multiple things happening around here at Tata Motors. The gentleman is very much in the money. Should he book partial profits, complete profits, or hold on because better days may be ahead?
So I would recommend to hold on for the target of around 850 to 900 in the longer term. The reason behind is that, first of all, yes, the results were not up to the mark. But now what we are positive on, first of all, in the domestic business itself, they have planned various new products across powertrains. So various new launches of the product, especially so across powertrain. So that is the major point, especially they are into the EV buses also. Now talking about JLR, yes, now the company is expected JLR volume to grow in H2 FY25, and in fact they have guided to maintain the net debt free status by FY25 also. So I think with the balance sheet in such a nice position, and we are expecting growth over H1 in H2. So it is a case for a long-term investment holding, and that's why we are recommending to hold this counter. Maybe it will take another 3 months to show strong recovery. But here, if the time horizon is more than 6 months, then stay invested. Initial target can be set at around 850 to 900 odd levels.
850 to 900 levels for Tata Motors is a mid to long term target. Ashish, what are the charts indicating after that correction that you have seen from levels of almost 1100 plus? Is there a chance for a bounce back? Should this gentleman add on to his positions here, or should he book profits considering he's still in the money?
See, if you look at Tata Motors, I think the stock has shown a healthy enough correction, which is approximately 50% of the prior rise, which we saw from the levels of 400 till the 1150 odd levels. It's corrected nearly 50% of that. And that's a very healthy sign. And right now, I think the down wave should be over and we should start seeing consolidation post, which the upside third wave should start, which usually is the strongest and the fastest wave. So the overall undertone for Tata Motors for me is going to be bullish. Also, as a disclaimer, we do have holdings on Tata Motors and the stock looks to be positive. We can expect it to move towards the level of 950 to 1000 over near term. And eventually we should see the stock above 1150 levels as well.
Should see the stock about levels of 1150 as well. Ashish, thanks a lot for that view. But Uma Bayandur is now writing to us from Karnataka, and she's holding 2000 shares of Suson, which she purchased at 47 rupees a share. She wants to know the outlook on the stock. Ashish, I'll come to you first on this. It's a very spoken about stock is Suson. Another one that has corrected from the highs. What are the charts indicating here?
Absolutely, it's the most talked about stock because traders have seen it going right from the 10 rupees level to the 85, and it has now corrected nearly 30 odd percent from the highs over there. So I would suggest at these levels, it's better to book partial profits. The buying price is around 47 and it's currently trading at 65. So better to book partial profit at current levels. And for remaining positions, place a stop loss of around 60 rupees, which is the gap area as well. And aim for the target of 85 on the upside. So hold on to your partial positions. Aim for 85 and stop loss can be 60. So the risk reward looks to be appealing to hold on to the partial position here.
What do you recommend, Astha, on the fundamentals? What should this individual do with her investments?
Definitely, a hold is recommended from our side as well. We are giving the initial price target of 73 to 75 odd levels. The results were good. And now what we know is that with the Renom consolidation, the company's balance sheet is now in a very, very good shape. So that is a major point where they have got various good orders also. So on these, we have, I think, and the strong industry tailwind is also helping the company in showing good performance financials going ahead also. Recommending a hold with a price target of 73 to 75.
73 to 75 on Suson, still lower than the highs of 86 that it had made, but higher than the current levels nonetheless. From Suson, we move to its peer, that is Inox Wind, and Samik Mohapatra is writing to us from Mumbai, and he has 1,300 shares of Inox Wind, which he had purchased at 220. Now, he's a short to medium term investor, and he wants to know whether he should hold or sell or book his losses. Ashish, what are the charts recommending here? 220 is the buy price. The stock is well below that. Do you see the chart showing any indication of going back to that level?
Yes, if you look at Inox Wind, the support as per price action, support comes to around 174, 175 level, from where the stock has found support and given a strong breakout. And I think as long as 174 and 175 levels is intact, we can expect the stock to reach towards the level of 220 or 230 again on the upside. So my recommendation will be hold with a stop loss of 175 for the target of 230 on the upside.
One final comment from Astha as well. Suson or Inox Wind? It's an A or B sort of a question. Which is a better investment right now?
I think both of these, but definitely Suson at any point of time because of the small ticket size also. So retail investors are always interested in such type of counters. But Inox Wind is also looking good to us. First of all, want to give the price target anywhere between 230 to 250 can be set as a price target. The most important point is their strong order book of more than 3.3 gigawatt. And in fact, the management commentary was very positive. They have maintained the guidance and of around the EBITDA margins of around 15%, 15 to 17% for FY25. So they are guiding about such kind of EBITDA margins. So this counter is also looking good to us. But yes, I always want to go with the Suson as my first choice. But both these counters are good. So remain invested in this counter as well. 230 to 250 can be set as the initial price target for Inox Wind.
Suson and Inox Wind, both investment bets, but Suson over Inox Wind is Astha's view. Ashish, Astha, thank you so much for sparing time and joining us this afternoon and answering our viewer queries. And those were Ashish Kyal and Astha Jain answering your queries. By the way, the markets continue to remain around that level of 24,200 is where the Nifty is, 300 points higher, slightly off the highs of the day. The PSU Bank Index, though, continues to remain the star of the day, 4.2% higher, continuing to hold on to gains, not one sign of a dip from the highs as we speak. The Realty Index too trading with gains of 3%. The mid cap and the small cap indices trading with gains of close to 2% each. With that, it's a wrap on this edition of Your Stocks. But do remember to email us your queries and we'll address them with our experts. Closing bell to take you through the last hour of trade on the other side.